Welcome to episode 3 of Regulatory Ramblings. Our guest today is Henri Arslanian, author, educator, speaker, and arguably one of the foremost FinTech experts and evangelists. I've even heard him referred to as the doyen of cryptocurrencies. His first book, The Future of Finance, The Impact of FinTech, AI, Crypto, and Financial Services, was published by Palgrave Macmillan and was ranked as Amazon's global top 10 bestseller in financial services. Henri's latest book, The Book of Crypto, The Complete Guide to Understanding Bitcoin, Cryptocurrencies, and Digital Assets, was also published by Palgrave Macmillan and was ranked as one of Amazon's global top 10 bestsellers in financial services, in addition to being the number one new release globally. Welcome to part 2 of episode 3 of Regulatory Ramblings as we continue our chat with Henri Arslanian. From 2011 till before the end of 2013, within an 18-month period, I recall the same institutions that were bad-mouthing crypto, by the end of 2013, were already coming around and making discrete inquiries with industry players.
Correct.
So, did conventional finance lose, or did they co-opt it, or how should we look at it?
It's a tricky situation. There's two things, I guess, to bear in mind, and I've reflected a lot about this, and because in many cases, for example, I think let's look at Hong Kong. You mentioned Gatecoin. First of all, Ajay, to your credit, I mean, you've been covering, obviously financial law and a lot of these topics for many years. I remember from your days at Thomson Reuters, and you were always at the cutting edge, and you had this intellectual openness to at least ask the questions, right, about this topic, which is very the right thing to do, and that's why I love journalists like yourself. There's a couple of things. I think, first of all, like what happened in the case of Gatecoin, which was actually led by a gentleman called Aurélien. I talk about him actually in my book. He was one of the first people I met in crypto in Hong Kong. I remember I organized his first speaking event, on crypto ever. And I mean, the banks on the situation are absolutely unacceptable. I think a lot of the banks, let's say in Hong Kong, where I was at the time, I hold them personally responsible for not only the bankruptcy of many crypto companies, but also many entrepreneurs personally. Because the banks, as soon as you mention the word crypto, basically they're shutting down your accounts. And by the way, for reasons I always ignore, if you're in the gaming industry and other industries are, for me, way worse. It's okay, but that's a different story. So the second thing, I think there's the personal issue. At the end of the day, one thing you realize, I think in any professional career, at the end of the day, people are selfish. People will always look for their own best interests. So today, if you go to, let's say, to a head of a bank and you tell them this is great fintech innovation or crypto, that we want to implement, the risk, the downside is more short term. And the upside is going to be maybe in a couple of years. But by that time, most leadership and most financial institutions would have long gone. So it won't really affect their personal life. It won't affect their bonus at the end of the year. And I think this is one problem. We've seen a lot of people that will always look for their own first interest. And, I think it's human nature. It's very difficult to change that. And I think that the leaders, the organizations that will succeed are the ones where they encourage people to take risk. They actually promote people who have taken risk and failed. I think that's the right mindset we need to have from that perspective. But I think the bigger problem, and I see when people tell me, Bitcoin is all used by money laundering, frankly, today, to give you some data, only 0.16% of crypto is linked to illicit addresses and wallets. This is in absolute terms. Last year, it's $10 billion, which is nothing compared to the traditional financial world. According to the UN, in an average year, there's between $800 billion to $2 trillion of money that is laundered. That's between 2 to 5% of global GDP. If today I was a criminal, I want to launder money, I would use good old cash. I would use a traditional banking system, offshore accounts, trusts, all the things that have been around for so many years. And lawyers, by the way, and law firms as well. And I think, and probably not crypto. Let me give a piece of advice to our listeners. If you want to do something illegal and you want to do not use Bitcoin. You will get caught. So it's fully traceable. I think there's a lot of these misconceptions in the market. So normally what happens when people tell me, Bitcoin is all money laundering. Actually, now what I do now, I give them a copy of my book. Because I explained it in there, I talk about this topics. I explain how it's not money laundering and the risk and all the kind of stuff. So hopefully, I think with better education, we'll have less misinformation.
Absolutely, because people say, oh, it's peer-to-peer. It's decentralized finance. Yeah, but at some point, you're going to want to convert that into regular currency. Correct. And those ramps connect to the regular financial system, at which point your identity must be disclosed. So yeah, absolutely. 100%. Don't ever use Bitcoin. Okay, so terms like fintech, regtech, cryptocurrency, blockchain, Bitcoin, digital assets, distributed ledger technology, and non-fungible tokens are thrown around so casually that many are numb to hearing about such topics. Should crypto be lumped together with broader discussions of fintech? But before that, the issue of distributed ledger technology is interesting because I want to raise this with you. Banks don't mind DLT, but they want their own closed circuit DLT that they benefit from. I don't think any cost savings will be passed on to customers. They don't want a DLT that's industry wide that we can use to see, okay, this is where the risk points are. Certain people in the industry, certain institutions have way more risky trades. That would help market stability and market, risk management. They don't want that. They want their own closed circuit DLT. Just wanted to get your thoughts on that.
Yeah, a good question. I think if any bank is looking at a closed circuit DLT, not using any kind of digital assets or crypto, they're wrong, right? This was back in the day. We used to often hear people say blockchain, not Bitcoin, right? It's absolutely. I think you're missing the point. I would argue that actually, if I was a bank CEO today, and somebody would tell me you can move your entire backend to blockchain technology or DLT, I think the upside of potential cost saving is not worth the risk you're going to take. Not just, the current systems may not be perfect, but they work pretty well. I think where it becomes more interesting is actually when you use some of these digital assets. For example, you're looking at tokenization, for example. It's a whole new revenue stream, new business that you're able to open. If you get into digital assets, offering crypto custody, crypto trading, crypto asset management, these are new businesses that you're able to offer to people, to your customers who want this kind of services, right? So I think from that perspective, I think anybody that has a bit of decent, knowledge in the space, I think they will get into the crypto asset space and not necessarily on DLT or blockchain. I think the only people who make money with the DLT blockchain is basically consultants, who can go run larger projects on these. I would not recommend to any CEO. Now, there are some use cases, by the way, let's say on trade finance, where the industry between the shippers, the bill of ladings, the letter of credits, it's an industry that has not evolved for 100 years, where I think there could be some merits in bringing BLT on. KYC utilities. To this day, I'm surprised that we don't have them yet, and we can talk about that another day. But I think that these are use cases where blockchain can play definitely a big role. But I think we'll probably see them, it will be via cryptocurrencies, and we'll see the banks get involved via central bank digital currencies, which many financial institutions are already doing, not because they want to, but in many cases because they're being forced to, because the central banks is leading. So I think that's something we'll see quite a lot on that side.
Okay. So then coming to the question about what the purists say, should fintech and crypto be lumped together? I mean, are they affiliated concerns or fields or is
I would say they're fintech. I would personally put crypto as one of the verticals of fintech, of broader financial technology. As we know, financial technology, initially when I started into fintech, it was, I was able to teach myself on my own a whole course on fintech. Of course, in the industry, like you mentioned before, from blockchain, from RegTech, robo-advisors, digital banking has evolved, and each one of them is a vertical on its own. I personally see at this point, digital assets still, could fall within that broader fintech category. But fintech for now is a cool, sexy term. Fintech will just become financial services in the next 5 to 10 years. So I think it's just gonna morph into it. So I don't think we'll have the term for much long.
If you were to talk to the average person, Henri, on the street without a college degree, MA, someone with the most basic secondary high school education, so think Hong Kong context, Form 5, lower 6, might have done their A-levels, bare minimum just GCSE. How do you explain to them that fintech and cryptocurrency should matter to them? And how will such advances change their world? Hopefully the better. and improve the way they conduct their transactions? And might there be spillover effects in other areas of their life?
Oh, absolutely. Very good question. I mean, there's many ways. I mean, you used the Hong Kong example. I mean, let me give you one or two examples. Let's say one of them is sending money around the world. Today, if you know, the average fee of sending money around the world is 7%. That includes the G7. You exclude the G7, it's double digit. You know, we're talking 12 to 15% to send money around the world, which is completely unacceptable in 2022. In an era that I can have an email, I can send a WhatsApp, an SMS for free instantaneously, that sending money takes a matter of days and it's so expensive, absolutely unacceptable. So I think that's a very good example of people, and often the people paying the price is not the person with the big private banking account. It's actually the person sending money with MoneyGram and Western Union, to friends and family back home. If you're sending money within the country, it's normally fine, but as soon as you're sending cross-border, these problems arise. That's a very good example. But there's other more life, I would say, impactful elements as well. You know, one of them is, like you mentioned Hong Kong, is real estate, right? One of the biggest problems, and the reason we've had a lot of these protests over the years, is because nobody's able to afford a house anymore, or an apartment in Hong Kong. I would say the average person in Hong Kong is not able to actually buy an apartment anymore because it's so expensive. And to just get enough money to make that down payment is pretty much impossible. And the reason is then obviously the price of real estate keep increasing, whereas salaries are not. And then basically people are trapped in this continuous rental market, right? And it creates obviously a whole Gini coefficient. People have, the more have more, and the people who don't just end up always being stuck at the bottom. Let's say we take real estate and we tokenize it. I may not have $1 million to put as a down payment, but I may have $10,000 to put as a down payment. And at least with these like tokenization of real estate, I'm able to get access to the real estate market. I'm able to get exposure to it. So I'm not able to actually be completely cut off from the system, but I'm able to actually gradually go up on the ladder, if you want, the real estate ladder. This is a very simple example of how it can benefit. I'm actually personally surprised in Hong Kong there has not been more tokenization of real estate. I blame the regulators for a big chunk of this. You know, for full disclosure, I sit on the advisory board of the SFC, but I really think that we are in many cases too cautious and have not moved fast enough. And this actually has been one of the problems, I think, for Hong Kong. So I think these are practical ways. And also, you may argue right now, you know, people can have their money into banks, but, you know, there is an argument to be said in Bitcoin, for example, that, you know, why there should be a way for people to hold value themselves. In the same way you have a banknote that you're able to hold, or you can have a bar of gold, you know, you should be able to have something that is not stored within your bank, which may go bust. And we've seen examples of this all around the world, from Lebanon to Argentina, where literally people had all their savings literally wiped out, not because of their fault, because of the fault of the bankers or the central bank or the policymakers around. Look at a country like today, like Turkey, that last month had 70% inflation. So, I mean, you know, or people in Lebanon who may have worked all their lives, they put their savings in the bank like any good person should do. And then obviously they lost their entire savings, right? Because of the banking problem. So I think there's a lot of these things that make you think as well, whether we should at least give people the optionality to be able to hold some value themselves, and not relying on any third parties like the banks.
Well, for me, the alarm bells went off when you know even the developed Western world isn't safe. That you were warned with what happened to the savings of people in Argentina. You were warned with a banking haven like Cyprus. It can happen in the Western Hemisphere. Therefore, people in the developed world, and I would count people in Hong Kong, they've been put on notice. I mean, my professor in law school had a saying, he would rather go back to the days when bank tellers had bars on their windows, because that more accurately depicted the nature of your relationship with that institution, because the banks are not your friends. For all the, talk of wealth management centers and having you come in and serving you coffee and all that, ultimately they're trying to get into your pockets. Buy-in into this, I mean, as far as I can tell, it depends on the age cohort. Older groups, less so, but some of them are coming around. More so because they see the gains to be made for investing in crypto. In that regard, the younger generation has done something positive in terms of bringing them around. But many people not so much, and it almost seems to me that as cruel as it is to say, we need enough of the older generation to die off for it to have almost cascade effect and tipping point, because the younger generation uptake and use of technology is strong, it's real. And again, the younger and younger cohorts seem more, not just more open, but they're actively participating in crypto. So again, I think it does need to reach a certain tipping point for certain generations to pass on. That that you only then will you see a new way of thinking that would foster a more advanced financial ecosystem. That's just my impression. When I think back to the dot-com boom, there were many firms with interesting concepts behind them, but they were having money thrown at them because they had an I or an E in front of their names. Not infrequently, some of them would come and share their pitches to us, the students at my law school in the late 90s and early 2000s. My sense was much of it was hype, and there was very little new technology behind them. So how is the current wave of FinTech and crypto, some call it a phase, some call it a craze, how is this age different?
Absolutely, and you're right. Back in the tech boom, there was literally companies that were from Pet.com to others, literally were just because there was a whole mania around it, right? And the
Hong Kong standard we named iMail for a time. Yeah,
exactly. So there's tons of them, right? And I think there is a hype to a certain extent in crypto. I mean, there's a lot of FOMO, fear of missing out, and 100% that was taking place this year as well. I still think we're in a buzz or in a bubble in areas like NFTs, non-fungible tokens. Especially because in the area of non-fungible tokens, they're literally non-fungible, right? So I mean, if it's a crypto Bitcoin, every one Bitcoin is worth another Bitcoin. But in the area of NFTs, it's like art. It's the eye and the beauty of the beholder. So there's definitely a lot of hype and hype around in some of these areas. Now, does that mean that it's all hype? No, absolutely not. I think there's a lot of these we're building the future of finance. There is a lot of excitement and FOMO around it, but at the same time, I think it's important you kind of focus on some of the elements that are really game changing. And you try to stay clear of the noise and the kind of the hype around. But I have to say it helps a lot as well, because I think the hype, the FOMO, brings more attention to the space. Not the right attention, but at least it brings attention, which I think, could be debatable whether that's good or not. But I think, digital assets are here to stay. Are the companies of today the companies that will be here in 20 years? Probably not. Are the top 10 coins that we have today will be the top 10 coins in 5 years? Probably not. But I think the asset class is here to stay. I think this is why it's very important to people to at least understand how it works and how it operates.
Do you still see these high valuations as interest rates rise?
Yeah, it's a good question. Obviously, a lot of the crypto companies even had to take down rounds and had affect the valuation. I actually think there was a very massive bubble in the valuation of the crypto companies. A company that comes as zero revenues, nothing, just a deck for its starting valuation to be $10, $15, $20 million, I just find it's very unacceptable. Where I think I saw the biggest bubble was really at the high end of the market, because, for example, there was a lot of FOMO also by private equity firms, sovereign wealth funds, pension funds, that want to deploy capital to the space, but their minimum tickets are often $400 or $500 million. So there's maybe like 24 companies in the world that could accept that kind of money, and I think there was a bit of as part of the fear of missing out ecosystem, if you want, or buzz. Many of the companies were raising at valuations are significantly higher than what they would command in public markets, for example. And I think that we're seeing it right now as we record this, where literally there's a complete disconnect between private markets and public markets where have fallen, and private markets where there's no new investments and really there haven't been a down round yet. So the valuations are not clear on how much they've been marked down. But I think for sure the valuations will go down. There's no doubt about that.
Okay. When we think of Hong Kong and then more generally Asia, are regulators ready to, oversee crypto? I mean, it's typically the case that economic activity ensues and then laws and regulations follow. What are your thoughts on regulators in Hong Kong and then more generally in APAC?
Sure. Yeah, I mean, first of all, for full disclosure, I sit on the SFC's FinTech Advisory Board. I believe that I'm their longest serving member, and as well as the HKIMR, the Central Bank's Advisory Council as well, the Council of Advisors. So and obviously I worked with many of the regulators around the world in various capacities, including IOSCO and the BIS as well. The one thing I would say is, I think that in certain regards, the Hong Kong regulators were very cutting edge. For example, some of the rules that we have that any hedge fund, any licensed asset manager, type 9 asset manager can have up to 10% of their portfolio in crypto with no additional licensing conditions. That is actually very cutting edge. That was only actually a couple of years ago, and Hong Kong was definitely the leading regulator in that space. Now, is the direction of travel of the Hong Kong regulatory framework for digital assets optimal? I don't think so. For example, the idea of forcing every single exchange to be regulated is great. I'm very positive with that. But then forcing them to only deal with professional investors, although they say it's temporary to start, but I think for any amount of time is a mistake because people still want to trade crypto. And if you don't offer them a venue to do it via regulated counterparty, they're going to go use offshore platforms. They're going to go do peer-to-peer. They're going to meet a guy in an alley from a truck who's going to sell them Bitcoin for cash. And this is why you've had many incidents of people getting robbed, people going to scam websites. I mean, I get personally, at least once or twice a week, one of my followers who will send me a message saying, Professor Arslanian, I was on this website. Is it real? How would I get my money back? And they're scams. So the reason people are using this is because they don't have media channels, platforms that are regulated, with proper, KYC, AML, and customer protection rules that could benefit. So I think that's one of the problems we've seen. Same in Hong Kong as well as Singapore as well. There's some regulatory frameworks that have been put in place, and I would say they're not ideal. The biggest problem right now, let's say if I look at the market, is actually that it's a broader problem that Hong Kong and Singapore has. Most crypto companies today have moved out of Hong Kong, not because of the regulatory framework, but actually, ironically, because of the COVID restrictions. So many of them have moved out. And many of them were looking at Singapore, but actually one of the problems a lot of crypto companies were having in Singapore was there seemed to be a bit of disconnect between what regulators were saying and what was happening in practice. And then there was some complaint that there was some unwritten rules, for example, of who you could hire. Singaporeans versus non-Singaporeans. Also getting visas was quite challenging for many of these firms. Actually, this is why I'm seeing many of these companies move to Dubai right now. So I actually believe, ironically, many crypto companies may use places like Dubai, for example, at least for the short to medium term, as their Asia hub instead of actually Hong Kong or Singapore. It's only 4 hours behind Hong Kong or Singapore. It's a global hub. It's been open all around COVID. So I think that's one thing I would say.
That is a story in itself.
Yeah. No, and I think and the data shows it as well, right? Many companies looking at it, not only in the fintech side, but also in the traditional financial side as well. Many of the hedge funds, for example, have been moving there. And I think one thing, just to give an example, in Dubai, there's now a crypto specialized regulator, the world's first crypto specialized regulator. Regulators set up explicitly for crypto. So that obviously changes the game, right? It's called the Dubai Virtual Assets Regulatory Authority. And if you're a crypto company today and you have the option to go anywhere to run your business globally, why would you spend time talking with regulators who are not really welcoming you, while you can go to a regulator in a country that is, arguably tier one, has a very good infrastructure, better than many other countries around the world, and who has set up a regulator explicitly to welcome such companies? Obviously, in the world of digital assets, this changes the game in many regards from that perspective. So ironically, I would say that the biggest competitor for Hong Kong, it could be Singapore, but I would argue in many cases now is also Dubai. If you're looking for a global hub, Tokyo, whether it's Kuala Lumpur, Bangkok, I think are good for regional roles. But if you're looking somewhere you can run a business regionally, but also globally, I think there's a bit more competition out there as well.
Certainly, it is a very livable city. From the time I attended the first Bitcoin event in 2013 at the DIFC in December 2013, and at that time I think there was a pizza joint on Sheikh Zayed Road. I don't know if it was Capri, but one of them was accepting Bitcoin for payment. And
here we go.
Yeah, and since that time, it's like everyone and their grandmother has jumped on. I see more old people or old people of older generations, shall we say, people born before 1950, in on the game in Dubai than I do here. You know, and okay, that's because of the gains that are to be had. But yeah, I mean, and a lot of it started off with their kids and their grandparents getting them into it.
Yep.
And they saw they saw the returns. And so, you know, they bet on the same, you know, that they put their chips on top of their kids' chips, to use a casino metaphor. And they were just raking it in. And for them, it seems to be the gift that keeps on giving. That you have people that may be tailors, or they may be, you know, doing any number of jobs around town. But without fail, when the markets open, they take their crypto career seriously. You know, I mean, and it's it has lifted a number of families to the ranks of the upper middle class that I know of in Dubai. So it's
Yep, exactly.
You know, it's done that, and as you said, the first crypto regulator, crypto specialist regulator. So yeah, huge openness. I mean, I know there were big hopes in Hong Kong several years ago when the SFC and the HKMA came out with their sandboxes, but you know, I mean, Hong Kong and Singapore have always been different, right? Singapore's always more been the state steers the ship and market activity follows. Hong Kong, it's always been more market driven, but sluggish sometimes. So this has been a fabulous conversation. Was there anything you wanted to add?
No, thank you for having me. Thank you for bringing attention to this great topic that is, at the intersection of regulations and crypto and fintech. No, thank you very much. And, for anybody who's interested, feel free to keep in touch. You can find me on LinkedIn, on Twitter. It's Henri Arslanian, so very simple, Henri Arslanian. And also, for those who want to learn more, there's obviously my YouTube channels. My YouTube channels now are available in French, English, Arabic, Spanish, Chinese. I put up all the content available for free. I have my online courses, and of course, my last book that you mentioned, the Book of Crypto, that is there for anybody who wants to learn more about the topic. So thank you very much for having me, Ajay. It was a great conversation. Thanks for having me on.